Hey guys, it's Julius again with another video of dividend investing. You know how much I like making money in the stock market, but I love dividends even more. Now you see, the problem with capital gains is that to actually enjoy them, you have to sell your shares. On the other hand, the beauty of dividend stocks is that you get to enjoy the fruits of your investment without having to actually sell anything. Now think of it as milking a cow rather than killing it for meat. Now the problem with killing the cow, you lose both the meat when it runs out, and there won't be milking the cow as well. I mean, dividend stocks can be imperfect because dividends are actually paid quarterly. Now the problem with this is that most of our expenses tend to be monthly, so when you depend on dividends to pay your bills, there's always something of a disconnect between your income and your expenses. Now this can make budgeting a challenge. Just think about it. From your mortgage, your car payments, your phone bill, even your Netflix payments is on a regular monthly payment plan. And that's perfectly fine when you are working and you are used to getting 1 or 2 paychecks every single month. Now budgeting is simply a matter of making sure your regular monthly income covers your monthly expenses with a little left over for expenses. Now thankfully monthly dividend stocks do exist, and there are actually a few of them out there. In this video, we are going to look at 3 monthly dividend stocks to buy coming up. The first stock we are going to look at is Realty Income. As of today, its current price is around $62. Realty Income is hands down one of the single best long-term income investments. Now, since going public in 1994, this REIT has grown its dividend at a 4.5% annually. It also has made 592 consecutive monthly dividend payments and has raised dividend for 88 consecutive quarters. But it's more than just an income machine. Realty Income has managed to deliver compound annual average total returns of 16.8% per year. In addition, it's providing growth. Realty Income is by no means the highest yielding monthly dividend stocks on this list. At current price, it only yields 4.5%. But if you're looking for a stable long-term monthly dividend payer that won't give you any drama, Realty Income is a solid choice. Indeed, Realty Income is probably the closest thing to a bond you are ever going to find in the stock market. In most cases, a stock is riskier than a bond, but Realty Income is about as close to a bond as you can realistically get to the stock market. Its cash flow are backed by long-term leases to high-quality tenants. Its properties are generally high-traffic retail sites that are mostly recession-proof. Think of your local convenience stores or pharmacies. The chances are decent that Realty Income owns it. My second monthly stock is going to be long-term care properties. At the moment, this stock is sitting at around $38. Among monthly dividend stocks, few have a better demographic prospects than LTC Properties. And in case you couldn't immediately figure out what LTC does, take a good look at its stock ticker symbol, LTC. It's short for long-term care, and that's exactly what its tenants provide. It engages in managing senior housing and healthcare properties. Its entire 200 plus properties portfolio is invested in skilled nursing, assisted living facilities, independent living and memory care facilities found around the country. Health and senior living are not exactly the most exciting market, but they have stable and growing demand due to the aging of the baby boomers. Now over 10,000 baby boomers turn 65 every single day, and this generation will need more and more health services with each passing day. Lastly, my third monthly dividend is Main Street Capital. It's currently sitting at around $32. Now, Main Street Capital is a business development company. This fund focuses on providing customized debt and equity financing solution to lower middle market companies. It offers financial alternatives to entrepreneurs, business owners, and managing teams. The best thing that has ever happened to business development companies was the collapse of the banking sector in 2008. Now, this created a vacuum that business development companies were more than happy to fill. Like I mentioned, This fund provides financing to small and middle market companies that are too big to be served by a bank, but are too small to access the stock and bond markets. Now, these funds are a lot like a REIT in that both of them have a special tax advantage. Neither business development companies nor REITs are required to pay federal income taxes, so as long as they pay out much of their earnings as dividends. So both sectors pay above market dividends, making both attractive to retired investors. But there is one downside. It can be difficult to maintain a steady payout when you can't keep extra cash on hand. For this reason, many of these funds end up having to cut their dividends after a slow quarter or two. That's obviously upsetting to investors. However, Main Street avoids this problem by keeping its regular dividends low and then topping it off twice per year with special dividends that can be thought of as bonuses. At current price, Main Street yields an attractive 5.7%. Now, the special dividends over the last 12 months have added an extra 1.2% for a total yield of about 7%. Now, that's far from being shabby. Now, if you want a monthly income, I believe all these 3 monthly dividend paying stocks will do the job for you. Remember, I'm not a financial advisor, and before you invest your money in any of these REITs, you should do your own research and consult professional help. Thanks again for watching up to the end. Don't forget to hit the like button and consider subscribing to join the journey. See you in my next video. Oh, I almost forgot to add LTC to my portfolio. Alright, I need to buy $100 worth of LTC. Okay. Okay, now I'm done. See you in my next video.